This conference will now be recorded.
Okay. Today we'll discuss about uh, basic business process understanding with accounting. Okay, let us take this topic today and then we'll try to understand this. Now, when I say basic business process understanding with accounting, let us assume that we are establishing a company and we'll be assuming transactions for the first 1 month. What are all the possible things that we need in the first month? And after writing all these first month transactions, let us prepare the manual accounting and let us prepare trial balance, P&L, balance sheet to see what is the exact result of this. And this will be base for us for the upcoming SAP sessions. So for the first company code, whatever we are going to configure, the same business process that we are drafting now, we will be implementing the same one with the similar figures in SAP to see the exact figures or exact number from SAP. So that it will be easy for us to connect how accounting is working in SAP. Okay. So let us take a simple example of let's say friends mobile store. Assume this is our shop name. So we are going to set up a shop or we are going to set up a store with with friends mobile store as a name. Is the name clear for everyone? So this will be the name of your store. And first thing that you need to understand here is what is the nature of business that we are doing. We are dealing with what? By looking at this name, what are we dealing with?
Mobile phone.
So we are dealing with mobile phones. So here we are not going to manufacture a mobile, correct? You will be selling multi-branded mobile phones, which means you will purchase and then you will sell, correct? You're like a trading business,
Correct.
right? So you're like a trader. So you will be selling multiple brands and then based on your sales you will be earning your profit or revenues. Let us consider this. First thing, to set up this mobile shop, what is needed? What do we need to start this business? We need to make some investment, correct?
Correct.
Yes, no? So investment is nothing but capital. So let me write transaction here. So transaction is your capital. And let me also write amount. What is the amount that is needed for that? What will be the amount that is required to set up a shop? Anyone? Any guess?
Minimum amount you will say 6 to 7 lakh.
Yeah. Let's say some 6 lakhs is needed. Okay. We are going with some 6 lakhs. Now remember this 6 lakhs is your capital, which means 6 lakhs is your budget for this business. Agree? So whatever you do, you'll have to manage within this 6 lakhs. So your entire first month transactions should be dependent on this 6 lakhs. So left and right you cannot spend. Left and right you cannot, distribute the amount here and there. So you have to be very calculative while doing any kind of transaction. Okay, so capital is a 6 lakh. Then what else is needed?
Purchases,
Now,
furniture.
yeah, right. So you need to purchase, but before you purchase something, you need to have a store, right? Right. We need a store where you establish a company or establish a store shop. You need to take one premises for rent, maybe one shutter or something. Yes, no?
Yes.
On a monthly basis, you'll have to pay rent for it.
Yeah.
So let's say you'll have to pay store rent. Right? So what would be the ideal amount for this store rent?
5,000.
Let us take 5,000. Okay. And nobody will give us store directly for the rent, right? They definitely need advance from us. Correct?
Yes.
So you also need store advance. Let's say they are asking us 3 months advance. Then what will be the advance amount?
10,000.
15,000. Right. Now you have capital and you have a store readily available. So now you can do all the transactions. So first thing what you need is you need to purchase. So how much do you spend for purchasing of the mobiles? How much do you spend?
3 to 4 lakh.
Let's say some 4 lakhs. Okay, 4 lakhs is now spent for purchase of mobiles. In our scenario, let us assume we sold all the mobiles. There is no closing stock. Okay, we are assuming whatever the mobiles we purchased, everything is sold out. So if you purchase for 4 lakhs, so what would be the amount that you would have sold for?
Plus profit.
Yeah. So let us take 6 lakhs or 5 lakh 50.
Yes.
Let us take 5 lakh 50,000. We purchased for 4 lakhs and we sold for 5 lakh 50,000. Okay. So other than this, can you tell me what are the mandatory expenses in the first month which I cannot ignore or which I cannot avoid?
Electricity expense.
Right. Electricity expense is noted. What would be the electricity cost or bill? How much would be the bill for electricity?
1,000.
1,000. Okay. What else?
Furniture.
Yes. You need to have at least basic furniture. What would be the amount for furniture?
70,000.
70,000 is too much, right?
For the mobile shop.
Sorry? Because you out of your capital 6 lakhs, you already invested 20 plus 4 lakh. So 420 is already invested. So what is your available amount in your hand?
Can you invest 40 or 50,000 on furniture?
Okay, let's take 40,000. Right. And other than furniture, what else is needed? What else is needed? Do you need a computer?
Maybe for
The
billing
customer
purpose.
comes. Right.
We need a computer, printer.
So you need to purchase a computer. Let's say you're not going for the branded ones, you're going for the assembled ones. Let's say you get it in 20,000. Yes, no?
Yes.
Yes.
And definitely you need a printer. Printer, let's say some 3,000 rupees. And to print, you need papers and different other stuff, right? What is all that called?
Stationery.
Stationery, right? You need stationery stuff, let's say some 1,500 rupees. What else is needed? Since you are setting up for the first month, you definitely give extra discounts, right, to attract the customers.
Yes.
Yes.
So discount given, let's say some 3,000 rupees, you have incurred on discounts. Assume that you are selling 100 rupees, 200 rupees less than the market price. Or let's take some 5,000 rupees. Okay. Anything else? Like certain things which we cannot avoid, right? Irrespective of your business performance. Like you have rent. You cannot tell that today my business was very dull, I'll not pay rent this month. We cannot give such kind of excuses, right? So this is a mandatory expense. So such kind of a mandatory expenses, if somebody is operating a business, what are such expenses or what are such transactions?
Capital expenses and operating expenses.
No, capital expense and operating expense will have a name, right? So whatever the furniture that you purchased is a capital expenditure. Computer is a capital expenditure. Printer is also treated as a capital expenditure because these are giving you the benefit for more than a year, right? And stationery, discount, electricity, store rent, these are all your operating expenses. And any way that you can get any income apart from sales, any other source for you to get income in this business?
Services.
No.
If
Service,
I mean, if repairing service is considered.
but that is part of your sale only, right? Sale of a mobile phone or sale of a service.
Okay.
Any other things that you can guess? I'm going to write whatever we are guessing. That's it. I'm not going to add
Is it
anything.
cash in hand?
Cash in hand.
That
No,
is similar to a capital only. Okay.
the offsetting for capital will come as your cash in hand.
Salaries, wages, whatever.
Yeah, right. Salaries. You're right. At least you need one or two employees, right? At least one salesperson or one, shopkeeper or somebody is needed. Let's say some 10,000 you're paying salary. Right?
Marketing, or does that also come?
Yes. Marketing and advertisement. Okay. Let's say some 5,000 rupees you're spending for this. Correct. Next. Just give a try. Give a guess. It's fine even if it is right or wrong. Because we are just learning now. Slowly we'll get to know the different things.
Insurance charges.
Insurance. Let's say we are not going for the insurance in the first month.
Okay.
Okay. Simple ones let us take. In the next exercise of the similar one, then we'll take everything. We are going as a standard business. What and all the things that you need, including insurance, whatever is there. So let us try to add everything. Let's make a big transaction list. That's it. It's fine. If that is it, we are fine with it. Now, these are the transactions. These are the transactions that happened. So from this, let us prepare the accounting. Now, this transaction is nothing but a business transaction. What is this called? Business transaction. Let me add it here. This is the business transaction which happened for this amount. Based on this, according to your accounting cycle, what comes next? What do we need to record after business transaction?
Journal entry.
Right. So look at this. After business transaction, we need to write journal entry. After journal entry, ledger account. After ledger account, trial balance. After trial balance, P&L account. After P&L account, balance sheet. Let us draft all these things manually now to find out what is the number for this. So journal entry is nothing but you have to debit something, you have to credit something. Correct? Now assumption is all the transactions are cash. So all cash transactions. All cash transactions. We don't have any bank transactions. Let us assume the reason as we did not open the bank account in the first month. The first month we managed everything with cash only. So offsetting account for everything will remain constant cash account. Okay, wherever you are spending, wherever you are receiving, let us assume we are spending in cash and we are receiving in cash. Okay, now the first one, capital. If you start your business with capital or if you invest capital in your business, what will be the accounting impact? What will be debited? What will be credited? Just
Cash
guess,
to
it's
cash.
fine.
Cash will be debited.
Right. So debit will be
Cash
cash,
to
you're right.
capital.
Capital will be credited. So amount I'm not writing because cash will receive 66 lakh on the debit side. Capital will receive 6 lakh on the credit side. Is this clear? So we are not writing amount again. So we are writing in a simple way. This is debit, this is credit for this same amount. Okay. Perfect.
Okay.
Now for the rent, what will be the entry?
Rent to cash.
Why rent to cash? Because rent is
Rent
an
is
expense.
expense, no.
Right. And you are paying in cash. When you pay rent, your cash is coming down. Perfect. Store advances. And remember, we are not considering any customer. We are not considering any vendor. We are not considering any fixed asset. In general, we are writing everything with respect to GL, which means no subledgers are treated here. Normally, what happens when you are paying advance? Do you get this advance back at the time of vacating or not?
Yes.
You will get it back, right? Now you are
Yes.
paying 15,000, but when you are vacating the premises, you will get back your advances, which means this advance is treated as an advance. Sorry, is treated as an asset. So what I'll write? If it is a asset, asset shows what balance, debit or credit?
Debit.
Asset,
Debit.
debit balance. So I'll write advance account debit. In what form you are paying the advance? Whatever you are paying by cash.
Cash.
Correct? Is the entry clear now? Advance account debit, cash account credit. Now purchases. When you purchase something, what is the entry?
Purchase account debit.
Correct. Purchase debit. What will be credit?
Cash.
Cash will be credit. Right. And when you are selling something,
Cash to sales.
cash debit, sales credit. When you pay
Electricity cash.
electricity, why electricity? Because it is an expense. Any expense, blindly take it on the debit side.
Furniture to cash.
Why furniture debit?
Asset.
Furniture is an asset. Any asset shows a debit balance, so we'll take it on the debit side.
Same for computer printer.
Right. So for computer debit, cash credit. Now, what will be the entry for printer?
Same. Printer or debit, cash credit.
To cash.
Right. Printer debit, cash credit. For stationery,
Stationery is an expense.
Stationery to
So
cash.
same, stationery to cash.
stationery to cash. So slowly, when we do this exercise one more time, you will have a fair knowledge on the accounting. Right? Discount given, you are giving discount. So is this an expense to you or an income to you?
Expense.
Expense.
So
Discount will be
expense,
debited.
Discount given to offset it.
discount given to, you are giving discount in cash, right? So you are receiving less cash. Correct? And for salaries,
Salaries to
Salary
cash.
account debit.
right? Salary to cash because salary is an expense. For marketing and advertisement,
Same expense.
marketing and advertisement to cash. Now, is this clear for everybody? The accounting entry, debit, credit, why we have debited, why we have credited each account? Any doubt in this, or it is clear? It's clear, right? Now, from this, what is the next step after journal entries? What we need to prepare?
Trial balance.
So, normally we need to prepare ledger account, but we are not preparing ledger account because we need to prepare so many. So, straight away, we'll go to the trial balance. Let us write trial balance. So, on the trial balance, you will have account, you will have debit, you will have credit. This is how your trial balance look like. Am I right?
Ajay, why
In
we are
general,
not creating ledger?
because we need to prepare each account. So that is not needed. So straight away, we'll consider the closing balance of each account and we are drafting trial balance.
Okay. But you show us no in SAP how ledger gets created.
No, in SAP it is straightforward. So only this is a manually.
Directly journal entry comes into picture
Correct.
in SAP.
Yes. If you write this journal entry, your ledger account, trial balance, P&L, balance sheet
Everything
are,
gets created.
yes, these are all ready made in SAP.
Okay. You will show
Because,
us in SAP, correct? You can show it to us.
yes, I will show. In SAP, we will create the same company code with Friends Mobile Store. We will do the relevant configuration. We will be posting the same transactions like this with same figure. Whatever the trial balance we are drafting here, with same figures
That's
we will
show
see
us
in
in
SAP.
SAP, correct? Okay.
Yes,
Got it.
exact figure, exact thing we will see in SAP. So that we'll connect more with respect to accounting and SAP. So this is what is normally the format of trial balance. So far we are understanding from the accounting point of view in general, right? When we get into SAP, then we'll see how we need to look at this from the SAP point of view. Now we are looking at from accounting point of view. So when you are preparing a trial balance, remember each account should reflect only once, which means you are not supposed to duplicate any account. If you look at this, first one is cash, Do you have cash one time or cash is reflecting multiple times?
One time.
One
In the
time.
entire debit, in the entire credit.
Yes.
Because this is master record. Cash is a master record. Let's say if I write a single liner here, normally you have master data, transaction data, and then reports. These are the three things which end user does. So if somebody is an end user, this is what he will be working on a daily basis. Okay, so they will create a master data. Based on the master data, they will create the transaction data. Based on the transaction, they will generate reports. Now, trial balance is a report. Trial balance is what? It is a report. And your master data is the GL account. Cash, rent, advance, whatever is there, these are all called as your master data. Now, if you look at all the transactions, how many times your cash is reflecting? Once or more than once?
More than once.
More than once. So every time, is it only cash or it is changing its name? Cash 1, cash 2. Is it changing its name or it is coming with same name as cash?
Same name.
It is coming with same name because it is the same master data. In general, we are not supposed to duplicate the master data. You will create a single master data. Within that single master data, you can record multiple transactions. If you have a cash, cash is a single account, but you can have multiple transactions with cash. That is what happened here. In every transaction, almost all, you have cash either coming or going.
Yes.
Now, when you prepare a trial balance, normally when you prepare a ledger account, what happens? You will take all the cash related transactions in the ledger account. Then your ledger account will give you the closing balance. Ledger account will give what balance?
Closing balance.
Closing balance. So closing balance of each general ledger account or closing balance of each account will be transferred to the trial balance. So this trial balance will receive the closing balance of each account. So closing balance is always a single figure. You cannot have two closing balances for a single account. If it is cash account, it must have one closing balance because details of all the transactions to prepare or to find out the closing balance are part of your ledger account. Okay. Now, when you prepare the trial balance, first what we will do, we'll go one by one. So far, let us go only by debit. On the debit side, do you find anything duplicated other than cash? Do you find any duplicate?
No.
No, right? What is duplicating as of now?
Cash.
Cash is the only one which is reflecting multiple times because cash is having multiple transactions. So you need to consolidate all the transactions and then arrive at a final figure. That is nothing but your closing balance. Now let us exclude cash because let us prepare the cash calculation at the end. Other than cash, let us write everything. So let's go one by one from the debit side. Let us ignore cash. We'll take it at the end. What is the next account? Rent. Correct? Huh? We are going this way. This order we are going. Rent. What is the rent amount?
5,000.
5,000. Debit or credit?
Debit.
5,000. Debit. What is the next account?
Advance.
Remember a logic. This is what are we looking at? We are looking at the journal entry, correct?
Yes.
In the journal entry, if an account is debited, this account will be debited even on your trial balance. Rent is on the debit side. Even in the trial balance, rent is on the debit side. Correct?
Correct.
So if you take advance is which side? On the debit side. So advance will come
Yes.
where? In the trial
Debit side.
balance, it will come in debit side only for 15,000.
15,000.
Next, purchases.
Yes.
Purchase is how much? 4 lakh. Next, cash we are going to calculate at the end. So electricity, furniture, computer. So all these things will appear where on the trial balance.
Debit side.
Understood everyone? Why debit side? Because they are debit on the entry, so they will be debit on the trial balance as well. Copy this. I'm going to put everything here. This amount I am going to consider on the debit side. Is this clear everyone?
Yes.
Yes.
No. So we are done with debit entries on the trial balance except cash. Now on the credit side, let us exclude the cash. What are the other transactions we have?
Sales.
First one is your capital. So let me copy capital here. What is the capital amount?
6 lakh.
6 lakh. So I need to take it on the credit side. What else we have? Sales. Copy sales. Put it here. What is the sales amount? 5 lakh.
5,50,000.
Correct? Now we are missing only one account. With what account we are missing?
Cash.
Cash is what we are missing. So let us find out. Cash closing balance. So how cash closing balance is identified? Nothing but debit minus credit. Okay. Debit minus credit is your closing balance, which means you need to consider all the debit balances of the cash and then deduct the credit balances of the cash. Okay. Now, how many cash debits are there? 6 lakh. And what is the other debit?
11,50,000 total. 5,50,000 plus 6 lakh.
So let me copy these two figures. This is debit. And if you take the credit, there are so many credits. There are so many credits. Let me copy them. Capital I need to ignore. So these three. Correct? These three and all this. Copy. Did I copy properly? Sales and capital. Right. If I come here and if I put these here, this is how you prepare your ledger account. In the ledger account, you take debit side all the cash debited transactions, credit side all the cash credited transactions, and then come down, close the debit, close the credit. Which side is more, debit or credit?
Debit side is more.
So when debit side is more, this account shows which balance, debit or credit?
Credit balance.
when you do a closure of the account, if the debit side is more than the credit side, then this account is having a debit balance. Okay,
Okay.
all right. Now cash is an asset. Asset always shows a debit balance. Reason, debit side is usually greater than the credit side in any case of the asset. So what is the balancing figure here? If I take this 11 lakh 50 minus 5 lakh 50, sorry, 5 lakh 5,500. It is 644,500. Now, is this matching? Are these agreeing now?
Yes.
So what is the closing cash balance? Is this. Now in trial balance, what is the figure that we need to consider for cash? We need to consider this. Let me add cash at the end. Okay, cash. It is showing a debit balance of 644,500. Correct? Agree everyone?
Yes.
Let me know if you have any doubts. Now let us do a total. What is the logic for the trial balance? Debit must be equal to credit. Now is your trial balance matching?
Yes.
Is the TB matching? This is your trial balance. These two figures are now matching. Debit, credit are matching. So this is trial balance normally from the accounting point of view. Clear? When you prepare the same transactions in the SAP, that time we will see the trial balance in SAP. That will also show the same numbers in SAP. If you look at cash, your TB in SAP also will reflect 644,500 in SAP. That we will see in the upcoming sessions practically. Now, based on the trial balance, what we need to prepare?
PNL.
PNL. So for PNL, let us try to identify the values here. Remember, your PNL is always prepared from the trial balance, and balance sheet is prepared from trial balance and PNL. So here, for the PNL, what is needed from the PNL? What data is needed for us to prepare a PNL? What items we need? Asset, liability, or income and expenses?
Expense and income.
Expenses and income we need. So let us highlight expenses. What are the expenses in the trial balance? Let me
Rent.
take this closing balance calculation to a little right side. So that we can draft P&L here. Profit and loss account or profit and loss statement. So here you need expenses and you need incomes. What are the expenses? What are the expenses we have?
Rent, electricity,
Rent, electricity,
stationery,
stationery, and
salary.
Okay. Let me put a different. Run. Let me put a different color for all the expenses. Run. Purchase is also an expense. Next, electricity. Furniture is not an expense. This is not an expense. This is not an expense.
Stationery.
Stationery. Right. Next. What next?
Salary also.
Yeah. Discount.
And marketing and advertisement.
Okay. What about discount?
Discount.
Discount is also an expense. Yeah. So these are the expenses. What are the income?
Sales is the income.
Hmm. See, in your P&L, expenses will be on what side? Debit or credit?
Debit side.
Debit
Expenses
side.
will be on the debit side. And incomes?
Credit.
Credit.
Credit side.
So if you want incomes, you need to look at the credit side. You don't need to go by everything. Simply look at the credit side because income will always show credit. It is always credit, whether it is in the journal entry or it is in the ledger account or it is in the trial balance or it is in the P&L account. It is always credit. So straight away you can look at the credit. Do you find any incomes on the credit side?
Sale
Any
account.
income is there? What is that? Sale. Right. So let me take a different color for income. Okay. So only one income, correct? Huh? Now, can we identify the assets? Asset is always on the debit side. So for any asset, look at the debit side only. For any liability, look at credit side. Okay.
Asset, furniture, computer, printer.
Advance
Advance.
is an asset. Furniture is an asset. Computer is an asset. Printer is an asset. What else?
Liability, capital. And cash is asset also.
Cash is asset. Capital is capital is capital is a liability. So we segregated asset, liability, income, and expense from the trial balance. Now let us straight away draft this. Now, what are the expenses we have? Rent, purchase, electricity, stationery, discount, salary, marketing. Copy this, put them here. Correct? Huh? And what is the value for this? 1, 2, 3, 4, 5, 6. You are able to understand, right, what I'm doing?
Yes.
Yes.
Put that here. This is your amount. Here also your amount. What are the incomes we have? We have a single income. sales. What income, sales here. Anything else we have? Nothing, right? So what I'll do, I'll calculate the totals for this. So let me do a total on the debit side. Let me do a total on the credit side. Which side is more, debit or credit?
Credit side.
Credit is more, which means your income is more than your
Profit.
expenses. When your income is more, you will get a profit. So your profit is, let us calculate, 550 minus 427, 500. That is 122, 500. Now debit credit matching.
Yes.
This is your profit. This is the P&L result, profit. Clear with this P&L?
Yes.
This is your P&L profit. Now last thing, let us draft the balance sheet. In balance sheet, you will not have debit credit, you will have,
Asset liability.
so liability, amount, asset, amount. So liability, amount, asset, amount. So what are the liabilities we are having? Only one liability, correct? Huh? What is that liability? Capital.
Capital.
Take this capital and keep it under liability. What is the logic for balance sheet? All the liabilities must show what figure, positive or negative?
Positive.
Negative figure.
Liability shows what balance, positive or negative?
Negative figure.
Asset shows what balance?
Negative.
No, asset.
Assets is debit, then positive.
Asset shows a debit balance, which is a positive value.
Positive.
Liability shows a negative value, which is a credit balance. So liability, make sure you always take credit number. Okay. So 6 lakhs must be credit. This is something that you'll have to understand. Okay, this must be there in your mind all the time. So whenever you prepare any balance sheet, because there is no debit credit concept in the balance sheet, you cannot just like that write the figure here. Because here you are doing debit minus credit, but on the balance sheet, this logic of same figure without any sign will not work. Right? You must be following the logic of debit credit sign, positive number, negative number in the balance sheet. Only then your balance sheet works fine. Otherwise, though you take all the transactions, it may not tally because of this sign differences, debit credit difference. Okay. Capital is given. So we have only one liability, capital. We have taken on the liabilities. Assets, advance, all the yellow is asset, right? Furniture, computer, printer, cash. 1, 2, 3, 4, cash. Copy this. Then put all this under assets. Okay. Now anything else will come in your balance sheet before I close? Are we missing anything in the balance sheet? Yes,
Yes,
no?
profit will come.
Profit will come, right. Now, profit will come as what figure? Profit shows what number? Now here it is showing a debit balance. Does it mean I can straight away take this figure? No, right? So let me consider the same figure and let me do a total. Let's see what happens. Is the balance sheet tallying?
No,
Why?
Because negative minus
Why balance sheet is not tallying?
profit should show negative figure.
Right? Profit should always shows negative number. So you need to make this profit into minus sign. Only then it will tally. Correct? You got the logics? Minor logics, but they will have huge impact. So if our understanding is not correct, then we will never understand. So we have to understand from the scratch, from the beginning, the basics, so that going forward you will not find any difficulty. So any questions here in the balance sheet?
No,
So what we have done, we have taken some sample business transactions. We assumed that we are setting up a new company. Okay. What is this? So this is what we assumed, that we are going to set up a new company with Friends Mobile Store as a name. And then these are the transactions that we drafted, all our imaginary figures. With the same thing, we drafted the accounting impact or accounting interest debit to credit. From this, we prepared a trial balance. We made sure that the trial balance debits and credits are matching, which indicates your accounting entry is proper. Your accounting entries are written thoroughly with effective. Now, after the trial balance, what we did, we went into reports. We went into P&L. In the P&L, we have taken all the expenses and all the incomes, and expenses incomes difference we calculated. So we found incomes are more than your expenses. So you got a profit of 1,22,500. After this P&L, we drafted the balance sheet. In the balance sheet, we considered all the liabilities and all the assets. The logic here is liability must have a negative number, asset must have a positive number. And one more thing that you'll have to understand, if you get a profit, what will be the number, positive or negative? So what should be the profit figure, positive figure or a negative figure?
negative.
Profit is always a negative number. If you get a loss, then it will be a positive number. Correct? So you have to pay attention what was your P&L result. If it is profit, take a negative number, only then your balance sheet agrees. If you are taking the correct figure but the minus plus sign you are not following properly, then your balance sheet may not agree, though you have taken all the transactions, all the values properly. The reason that the small point of assigning plus minus symbol we are missing. Any doubt in this? Anyone? Any questions?
No,
No, right? So as an exercise, as an activity, what you will do is you also try to create similarly one set like this. Okay. Simply
Okay.
take these things, take the same thing, try to add some more expenses, try to add some more transactions which you are confident of. Do not make any experiment. If you know that any expense will be debited, take another 2-3 extra expenses, add some more incomes, whatever you're confident of. Then take your imaginary figures here. Take your imaginary figures, write down the accounting entry, prepare a trial balance, make sure your trial balance is agreeing, and then prepare the P&L, find out profit loss, go to balance sheet, find out asset liabilities, and keep it aside. Once this is done, keep it aside, because this will be a real case for you to practice in your SAP. Okay, in SAP, once we start configuring, what you will do, whatever the data that you have taken here, use the same data as your test data, whatever the name that you have assumed for this. So you'll have to create a company code, do all the necessary baseline configuration, create this GL master data, record this accounting entries, generate the trial balance, make sure you are getting the same figure from SAP, and then
Okay.
look at the P&L, make sure you are getting same profit from SAP. Look at the balance sheet, make sure you are getting the same number from SAP. Whatever you manually prepared, replicate the same thing in SAP. There you will understand, okay, to create a transaction in SAP, it is not straightforward. We need to do different settings or different configuration. So that is nothing but your baseline configuration. You will understand what is baseline configuration, what is organization structure, and what are the prerequisites that we need to set up in system before we record any transaction. So everything we will understand practically, conceptually, so that if you are recording something, you will know that, okay, these are all the prerequisites that I need to configure. Clear?
Yes.
Any other questions? Anyone?
No.
You can ask me now. No questions?
No other.
Yeah. Others? No questions?
No.
All right.